Good morning, dear traders. You are watching financial news on ИнстаФорекс TV channel with me, Tahmina Salomova. Last week, members of the Federal Open Market Committee, together with some US politicians, produced a number of crucial insights into the monetary policy and economic conditions, as well as future projections. Besides, speakers expressed their opinion in regard to a possible interest rate increase in the near future. The most optimistic speech was delivered by Eric Rosengren, president of the Federal Reserve Bank of Boston. He pointed out an improvement in the US macroeconomic data and predicted that inflation growth would reach 2% if economic growth rate stood above the average mark. Rosengren turned out to be one of the few politicians who last week supported the December interest rate hike last week in cause of gradual tightening. Chicago Fed President Charles Evans didn't share Rosengren's sentiment, making pessimistic comments on the low inflation rate that still concerns him. Mr. Evans made it clear that he expects a faster rise in consumer prices. According to the report published last week, consumer expenditure increases by 1.3% a year. It is below the level targeted by the central bank. Charles Evans is among those who call for patience in regard to lifting rates, waiting for a favorable situation for further monetary tightening. Considering the technical aspects of monetary policy's impact on inflation, Mr. Lake underlined it was the Fed's policy that greatly influenced inflation expectations rather than employment or economic growth. Richmond Fed president has a strongly hawkish stance and is sure that the time has long come to hike rates. Other Fed policymakers also stated the readiness of the US economy to start raising short-term rates in case of inflation growth. During his speech, President of Federal Reserve Bank of St. Louis James Bullard said that the time for lifting short-term rates from the current level has come. According to him, the labor market has returned to equilibrium and the inflation stands at such low levels due to falling prices in the commodity market. In particular, Bullard expects investors to be cautious in case of a slowdown in monetary policy normalization. William Dudley is also optimistic, saying that it's possible that liftoff conditions will soon be certified. It might happen indeed, as economic growth also raises concerns linked to low inflation. The official also pointed out that the threat of slowing economic activity fades away owing to increasing domestic demand. Loretta Mester also provided her arguments for increasing short-term interest rate touching on strong macroeconomic data on the US labor market. Mester said that the US economy is able to withstand rate hikes without profound negative consequences. Last week, Federal Reserve Vice Chairman Stanley Fischer lectured on the influence of the national currency on the United States economic health. He pointed out that the strong greenback made US goods less appealing from the price viewpoint and that the dollar's growth partially bore on the Fed's decision to keep the rate at low levels. However, during the speech, Fischer hinted that the US economy has resolved the unfavorable factor. Still, the one opinion that investors waited for the most remained unspoken. Federal Reserve Chairperson Janet Yellen gave not a single word about the monetary policy, thus puzzling those who are quite sure about the upcoming interest rate increase. Tomorrow, the latest FOMC meeting minutes will be unveiled and maybe market participants will find out Yellen's viewpoint. You have watched financial news on InstаФорекс TV channel. See you!